Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. Well, on the technical side, there are a few moments that we have to discuss, and mostly they stand on the higher time frames. On the daily and on the intraday charts, nothing to talk about. We just briefly will take a look at it. But the major information for us, as for a trader, stands on the higher time frames, which are mostly driven by the fundamentals. And particularly to the fundamentals, we have dedicated today's update, today's report, where we have take a bit deeper view on the ongoing processes in the United States economy. We explained why Fed has no tools to resolve this problem, and this is natural process that needs time to be completed. So whatever the Fed will do with the interest rates, rising rates, dropping rates, they can't lead the economy capacity to match amount of the consumption and actually the amount of the goods that population would like to consume with the cash that they have on their hands. Because currently, to keep it easy, the population in the United States have 2 times greater cash for consumption that economy could produce. And that's the problem. So, in two words speaking, the value of this cash should be discounted and devalued at least for 2 times, which means that economy will drop approximately for 2 times because of the drop in the consumption. So this is structural problems, and inflation is a structural problem in the United States that can't be resolved with just rating change. Speaking particularly of inflation, guys, in this time I haven't talked about this in too much, because, we have in details taken a look at it previously, and the structure of the inflation, and currently you could even just watch the TV to understand the real inflation problems, that they are not just 8%, but in general they stand about 15% if you will take a look at the PPI index and finished goods. And even just, take a look at the recent Tucker Carlson report. It stands for the 12th of May, it's a recent report. As calls the inflation has been disaster for virtually everyone. It's a very short term, really short program, and he explains what real inflation stands in different spheres: gasoline, food, and everything else, mortgages. So just take a look at it and explains everything about inflation. So it even has shown on the TV. We're trying to understand why gold shows this performance and what's going on. It will be better if you read the report. But in 2 words speaking, those of you who are lazy enough to not read the reports, gold currently is a hostage of the process when everybody is hunting for the liquidity. Fed crucially needs liquidity to serve the debt. Last week we explained this process as demand for the United States debt has dropped for 30%. But Fed needs money. First, to issue new debt to replace those ones who have been closed. And also they need debt to pay the interest. With the rising interest rates, they need more money. But here we have to take into consideration the corporate debt exists as well, and is the bulk of the global debt than the United States dollar. You understand now why there's a lot of demand for a dollar. So dollar is rising not because of this very attractive currency and because of the strong United States fundamentals. Absolutely not. This is purely fiscal demand for dollars to serve the big debt. Also, the 2/3 of the global debt with the floating rate. As the rate is rising, the more money you need to serve it. But at the same time, Fed now is drying the liquidities because they stopped the quantitative easing and turning it to the quantitative tightening, which means that the debt that they have on the sheet, the balance sheet, will be thrown on the market that lead to grabbing more money out from the market. And that makes dollar become more expensive. Simultaneously, this hurts every other market just because Fed is trying to search the liquidity at any market that actually they could find. So, for instance, you could see what is going on the stock market. I will show you. So you could see it by yourself. 25% drop since the top of the year. That's Nasdaq drawdown. Approximately 30%. Very big drop. That is just the beginning, guys. Second, cryptocurrencies drop for the 60%. So liquidity is sucking from any source that they could find. And this process stands in the way. That's why this is a natural process. And gold has no choice just to be the hostage of this process. But at the same time, you could see that gold resists pretty nice to all this process, and investors understand that in the current situation, it is very important to keep some assets in the real keep the assets in real assets, and which is gold currently. And when this really rush for liquidity, hunting for liquidity, will be decreasing, the gold starts rebound. Because our suggestion that in the United States economy is closer, we're coming to the end of the summer, the political struggle in the United States in November elections, the current process that we see in the economy, and actually Fed just has no tools to fix the situation. Very soon investors will start demand high yields for the United States debt, not because of the Fed changed the rate, but because of the default risk. When we see currently there are corporate defaults coming in junk bonds, and with the deeply negative interest rate, with the approximately currently minus 8% of the return of the United States bonds, who will buy it at this rate? With the situation when the Fed currently really could meet the lack of liquidity to serve the debt, because nobody buys the new issues. So this is really, I suppose, will be just a catastrophe in the nearest time. For the stock market, it will be approximately 50% drop on the S&P, so approximately to the 2,500 level on S&P, and later maybe even deeper. And when this process starts, when the investor starts to search high demand for higher interest rates because of the default risk, the gold will start to reverse. When we start getting statistics of the rising unemployment, dropping of the consumption, dropping of the gross domestic product, keeping inflation on the higher rates, dropping of the PMIs, which already stands, rising of the mortgage rate, we're closer and closer to the moment where gold will start reversal. I think that it's not really a lot of time we need to wait. It's maybe for the summertime. So now, sorry for this fundamental off-topic, and currently we're coming to technical situation. On the lower time frame, as I said, not a lot of things to discuss. Currently, guys, in general, performance in May increases chances of the further drop. It's just because of fundamental processes that are not over yet. We probably will get some prolongation of it. But also in purely technical performance, you can see the acceleration to the OP, which makes more possible that we'll get drop back to the 1675 lows, somewhere to this area where we have the XOP, and also we have this large A, B, C, top, D pattern. Here's drop definitely is faster than this one. And technically, it increases chance for the further downside continuation. Meantime, on the weekly chart, we have reasons to count on the bounce, because we have actual Jordan stretch bullish stretch pattern, combination of the fib level and oversold, which is also an agreement with this ABCD. We have the OP as well here. So moderate pullback has chances to happen. But at the same time, we should not take long position blindly just because market stands here. We need to get signs of the reversal in lower time frame. And that is particularly the problem that we have currently, because if we'll take a look on the daily chart, we do not have something special yet. On the 4-hour time frame chart, also, it's nothing yet by far. And in general, on the intraday charts, it is a big question to what degree we should treat this wedge as a bullish. So, except this may be wedge and weekly oversold, we do not have yet any positive reaction. You can see that once we thought it might starting something on the completion of the butterfly, yes, this minor pullback has started, but market has dropped below the 1618 butterfly, which means that it's probably failed. The failure of the butterfly is a really bad sign. So the only hope right now that we have is the oversold on the weekly chart. But at the same time, if we will see on a daily chart, on the 4-hour time frame chart, that market turns the sideways instead of the turning up, that will be the signal for a possible coming drop on the gold market. This will be a negative sign. So, as a final point, what we have, it is not comfortable to take the new short position by far. It's just because market sensitive oversold and support. At the same time, gold has not generated yet any bullish background to let us to take the long position. It means that currently at this point, I would say that we have nothing to do by far. And in the coming week, we will keep an eye on performance where the market will be able to form something bullish that we could try to follow.